Namaskar, good evening, friends. Today we will see the results for Q4 and for the whole year of HDFC Bank Limited. HDFC Bank is arguably number one or number two maximum among the private banks. ICICI and HDFC are in competition with each other. HDFC is better in some respects, ICICI is better in some other respects. Currently, the market price of HDFC Bank is 1692 and odd. 52-week high is 1702 and 52-week low is 1271, currently 1692. It is very close to the 52-week high. Volumes are good, 17 millions plus. So, selling and buying in HDFC Bank is very, very easy. The CEO and Director of HDFC Bank is Shashidhar Jagadishan. Now, first we will see what are the strengths, weakness, etc. and then we will go to the results. Normally, you can go to the results and then discuss the strengths, but we can go the other way around also. You will understand results better then. Return on assets has been improving since last 2 years. Growth in net profit with increasing net profit margin quarter on quarter also. Net profit is increasing, net profit margin also is increasing quarter on quarter. Revenue is increasing for the past 4 quarters. Generally, many private banks which are efficient, reasonably efficient, they are on an upward curve in India. So, increasing revenue every quarter for the last 4 quarters. Increasing profits. Company is able to generate net cash, improving net cash flows. Annual net profits are improving for last 2-3 years. Book value is improving. Company with zero promoter pledge. Most banks have no pledge. Most banks. That's very healthy. But there is another thing that will come to later on. NPS. FIIs and FPIs are increasing their shareholding. Currently, the price is near 52-week high. The price momentum is strong. Upward. Not like this, but like this. Anyway, it is good. Results are reasonably good. But are there no weaknesses? There are weaknesses. Return on capital employed has been declining slightly in the last 2 years. Now, if you look at the Piotrowski score, that also is a little weak. But in spite of that, some brokers have upgraded their recommendations and the target price in the last 3 months for HDFC Bank. Provision is decreasing in the recent results. Remember, face value is rupees 1, can't go below that. It has reduced it to 1 rupee. Market cap is 9,44,000 and odd. Sector price earning is 26. Book value is 446. As we already told, price is very near to the 52-week high and far away from 52-week low. Momentum is bullish. It is outperformer compared to Nifty. Now, if you look at the shareholding pattern, promoters have decreased their holdings from 25.6 to 25.59, marginal decrease in the latest Q4 quarter. Mutual funds have increased their holdings from 18.37 to 18.47% in the last fourth quarter. FIIs have increased their holding from 32.1 to 32.24. Institutional investors have increased holding. That is, see, all people have got a lot of confidence on HDFC Bank. HDFC Bank is a somewhat conservative bank which is always progressing. Banks should be somewhat conservative. If they are very rash, they will go the way of Yes Bank. Now, how was the price faring in the last 3 years? In the last 3 years, it has gone up by 89%, which means, and in the last 1 year only by 15.53%, which means it was never a multi-bagger. Will it be a multi-bagger in the current year? Who knows? It's a good bank anyway. Now, if you look at the quarterly results, interest earned on advances or bills, 35,850 crores in Q3. It is improving. So I don't think we need to go through all those things. It is improving in all the quarters. Consolidated net revenue grew by 20.3% to 34,553 crores for Q4 compared to 28,734 crores in Q4 of last year. See, 34,553 crores in this Q4, whereas 28,734 crores only in last year Q4. That is the consolidated net revenue. What about consolidated net profit for Q4? 12,595 crores, up 20.6% compared to last Q4. Earnings per share 22.6 rupees. Book value per share, that is on 1 rupee they have earned 22.6 rupees earned per share. Book value has gone up to 519 almost. For the year, if you look at that, consolidated net profit for the year ended March 31st, that is for the whole year, 45,997 crores, up 20.9%. You can take a look at the standalone results also for the fourth quarter. Net revenue grew by 21% in the latest quarter to 32,000 crores compared to 26,500 crores only in Q4 of last year. Net interest income has gone up by 23.7% to 23,352 crores. Net interest margin is important. That is at 4.1% on total assets and 4.3% based on interest earning assets. Other income is at 8,700. Other income also is normal in respect of banks, most of the banks. It has gone up by 27.2%. It is other income is 27.2% of the net revenues. 7,637 crores. So there are four components of other income. Fees and commissions 6,600 crores, something like that. Foreign exchange and derivatives 1,010 crores. Net trading and mark to market loss 37.7 crores. Miscellaneous income 1,130 crores. Operating expenses are 13,462 crores, an increase of 32.6%. So, operating expenses have gone up more than proportionately compared to interest income, etc. An increase of 32.6%. The cost to income ratio is at 42%. Then pre-provision operating profit is at 18,621 crores, excluding net trading and mark-to-market income. Provision and contingencies. This is an important item for banks. It has come down provisions and contingencies is now at 2,685.4 crores as against 3,312.4 crores in last year Q4. So last year 3,300 and odd, now 2,685. So significant reduction in provisions, which means it is becoming healthier. The total credit cost ratio is 0.67% now compared to 0.96% last year Q4. So that also has come down, 0.67 now, 0.96 then. Profit before tax is 15,935.5 crores. Taxation 3,888.1 crores. Net profit is 12,047.5 crores, which is an increase of 19.8% over the last year's same quarter. For banks, balance sheet also we have to see to some extent at least. Balance sheet size has improved from 2,068,000 crores to 2,466,000 crores. So a growth of 19.2%. Balance sheet size has impressively increased. Deposits have shown a healthy growth of 20.8% to 1,883,000. 20.8% increase. CASA deposits have grown by 11.3%. Savings bank deposit at 5,62,493. Current account at 2,73,496 crores. Time deposits 1,047,000 crores, an increase of 29.6% over the corresponding quarter of last year. CASA deposits are now 44.4% of the total deposits, which is very good for any bank. So HDFC Bank is really focusing on CASA deposits. Total advances are 1,600,000 crores, an increase of 16.9%. So total advances are 1,600,000 crores. Now, gross of transfers, interbank participation certificates have grown by 21.2%. Domestic retail loans have grown by 20.8%. Commercial and rural banking loans have grown by 29.8%. And corporate and other wholesale loans have grown by 12.5%. Overseas advances constitute very minimum out of the total loans, 2.6% only. Now, profit and loss account for the entire year, that is FY 22-23, latest year. Bank earned a total income of 1,92,800 crores as against 1,57,263 crores for the previous year. So there is a significant increase in the total income in the current year. Now if you go to net revenues, 1,18,057 crores as against 1,01,599 crores last year. So net income also has improved reasonably. Net profit 44,108.7 crores, up 19.3%. Let us look at capital adequacy. Total capital adequacy ratio as per Basel III guidelines was at 19.3% for the latest year, as against the regulatory requirement of only 11.7%. Regulatory requirement is 11.7%, but HDFC Bank's capital adequacy ratio is 19.3%. Last year it was 18.9%. So 18.9% of last year itself was very good. Now this has grown to 19.3%, which is very, very, very good. This bank is now identified as a domestic systematically important bank, DSIB. Tier 1 car was at 17.1% latest year, last year 17.9%. So this year Tier 1 car has come down. The overall car has improved. Common equity Tier 1 capital ratio was 16.4% latest year. Dividend. Board of Directors has recommended 19 rupees per equity share of rupees 1 for the latest year. Last year it was 15.1 per equity share of 1 rupee. So last year it was 15.5 rupees for every 1 rupee share, now 19 rupees. So dividend has also increased. Now what is the net worth? Latest tally is 7,821 branches and 19,727 ATMs, etc., withdrawing machines, deposit machines across 3,811 cities or towns. So last year how much was it? 6,342 branches. Now 7,821 branches. So 52% of all this is in semi-urban and rural areas. They have got business correspondents 15,921. Asset quality. Non-performing assets were at 1.12% of the gross advances. Gross NPAs is itself 1.12%, whereas in some other banks it is over 5%, 4% like that. Here it is 1.12%, which means loan giving criteria are reasonably good, standard. They are not losing much on NPAs. Only gross non-performing itself is 1.12%. Net non-performing assets is very low, much less than 1%, 0.27%. So that is very good. The bank has some subsidiaries. We are not going very deep into those subsidiaries. HDFC Securities Limited. There is one more, HOB Financial Services Limited. They are also doing very well. So overall the bank is doing very well. The record date for the dividend is May 16th. The dividend is 19 rupees per equity share. Thank you for listening. HDFC Bank is a very good bank, but will it be a multi-bagger? It will not be a multi-bagger. Whether it will lose value, it will not lose value. Generally speaking, I am not an astrologer to predict what it will be next year. But generally speaking, going by the past record, HDFC Bank as a conservative bank will always move upwards, but not like this, but just like this. Thank you for listening. I will be back with you with another very good company.